Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for May 5th, 2017. Happy Cinco de Mayo and happy birthday to my baby girl Mia, who turns 5 today. It's going to be a party. Hey, let's take a look here at the daily chart of the ES. Right now, we have a very tightly coiled range. Again, super significant. You can quantify that information right here and see how narrow that range is. Only a 15.25 point range over the last 5 days, and that's been the range here that we've been seeing for more than 5 days actually. So this is significantly tightly coiled. What I mentioned before, any late longs up here that don't get paid are at risk of having their stops run. But the longer it stays up here now in a super bullish market, I think the bulls have a better waiting period here because the market continues to go up. So now I believe that any late sellers up here that have been trying to push this thing downward, they're at risk at getting their stops run. So we have two-sided trade up here where this thing could unravel in either direction. The overall direction has been to the upside. So I've mentioned before, acceptance beyond 2400 would open up 2424 and 2459.75. And any failure to hold 76.5, that's the major level here, 76.5, would open up a move back to 53 and 48 on a high probability basis, with a shot at rotating somewhere into the 2330s to 2320s. So we're going to continue to watch the edges. We have NFP report coming out, Janet Yellen speaking later on. We have French elections this weekend. So this thing could increase in volatility here heading into next week. So continue to watch the edges. If we take a look here at the daily time frame, again, the importance of having very clean edges to trade off of. The previous session and the previous week, we've been talking about 76.5 being the key level to defend. And that's what happened again with bulls coming down and defending that area and returning price back up. Same thing with the 88.75s, continues to be an area to defend. So continue to watch the edges of the range here and fade the edges until expansion occurs. Let's take a look here at the CL. Crude oil. What a significant move we've seen in crude. We knew that there could be some more downside in crude ahead, especially once prices were not able to hold the 48.80s. That was a big tell for us. Last Friday, 48.80 was the low. That was the area I mentioned bulls wanted to defend. But come Monday morning, I mentioned the stops may get run, and we may see a push into 47s to retest these lows. And then we'd see what happens from there, and you can see the thing just drilled through those 47s and continued lower. We opened up our downside stops yesterday, or downside targets yesterday, pre-market, talking about 45.43. That level was hit by the end of the day, and then here we've seen the major flush come out. The bottom came out this morning in overnight trading, and a major reversal has occurred from the lows of 43.76, and price has rallied over 2 handles from those lows, now holding at highs. That is a bottom here. That's when the market is attempting to create a bottom. And so right now, any rotation into about 44.30 to 44.40 will likely be defended for a shot at continuing this thing higher overall. But this is a major tail here. We have to see how the price develops above that tail, but this is a zone where we talked about in our trading room that we could get down as low as 42 to 43s because that's where significant support is, right in that area. And we got that low in overnight trading, now seeing a major rejection. So this could be the initial rejection signature that leads to an absorption and perhaps a bounce back toward value. But we got to continue to see how it develops. But this is a significant day here after the flush. If you look at the intraday time frame here, you'll notice how that reversal occurred. You can see how this thing sold off significantly in overnight trading, hit the low, immediately bounced. Here's the absorption that occurred off 44s, and then we've steadily continued higher. That is a major rejection tail there developing. Again, this thing could get as low as these 44.30s and still be considered bullish overall. So we have to continue to watch this structure to see how it develops. But by the end of the day, we'll see how this looks because that could be the beginning of what could turn out into much more strength ahead, at least over the near term. Now, after a major stretch that we've seen this week, big high range week, we could see tighter range activity in the upcoming week. So we'll see how today sets the boundaries for that. Let's take a look here at gold futures. Gold is another one of those where we had the buy point at much higher at 1263, and then once the week began, or pre-market this week, Monday morning, I mentioned that the stops are likely going to come out. Be a seller that looks to run those sell stops of these bulls who didn't get paid. Bang, that's what it looks like. So in crude oil and gold, we've seen the same type of behavior, and that just shows you the power of stops. When price is not paying those participants who are in, their stops come out and a major momentum move occurs. That's what we've seen here, and this thing could continue much lower. I know I mentioned before that below 1240 is an opportunity to trap, and it still is. This still is an opportunity to trap, but we're not seeing rejection yet. As I mentioned before, it could take several days to build some energy here and then force a squeeze, but there's no rule here that says we have to do that. And the next support level down is 1200. So if again, if price cannot reestablish above 1240 pretty soon, we could be looking at a move into 1200. So again, still a downtrending market. Bears are still defending pullbacks as this thing hunts for rejection. So continue to be bearish gold until we see signs of rejection. Now also in the NQ here, what we've seen with the NQ is price hold at these highs. 5600 has been a major pivot in the charts. Price holding cleanly above that level after making it resistance, and then you see the push up and it's holding. Very, very narrow range here. On a 5-day basis, again, quantified, it's below 65% of ADR. That's significant, and again, that tightly coiled price action is indicative of all the data points coming out this week. So once we get that expansion from this range, it could be significant. Now, any short-term rotation below 56s has big-time support into 5470 and the trigger zone of the PIMA. So any rotation downward would be a fantastic buying opportunity for another round of strength to new highs. All right, let's see how this NFP report comes out. Good luck, trade well, happy Friday, and happy Cinco de Mayo.